I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We print it digitally.
The strength of a nation's currency is based on the strength of that nation's economy.
So we as a central bank, we have the ability to create money.
What does it mean for you?
We also print actual currency.
But remember, our economy has got very strong long-term fundamentals.
That actually increases the money supply.
Goddamn governor, he's going to police this goddamn gasoline situation. I will not take
all but perfect agreement on macroeconomics. Now, that just sounds so romantic. He could have just...
This is a podcast dedicated to exploring the money that rules the world and the guns that back it. This is Guns and Money. Hey everyone, welcome to Guns and Money. This is the first show that's going to focus specifically on markets. I told you in episode 4 that it was coming, and here it is. So originally, I was going to kick off the Guns and Money markets angle of content with a look at the Fed over last year and kind of what they've been up to. But we've had some more interesting developments the last few days, really the last few months, but it hit the broad public's radar beginning in the end of last week. And we're going to talk obviously about Wall Street bets and some of the irregular trading activity you've seen in some what are being called meme stocks. But for any of you that are travel kind of in the world of securities and finance, I would say what you're seeing is some cigar butt companies, companies that are near the end of their useful life as a going concern, or at least just former darlings, kind of not quite fallen angels in the high yield debt sense, but just names that are out of favor, like mall retailers, like GameStop. So yeah, I threw out the script on talking about the Fed. We've got to talk about what is, I think, the growing beginnings of an insurgency, or just a dynamic that you're seeing public unrest expressed in a very, very novel way through financial markets. And in a way that I think creates a feedback loop that just kind of gives this movement more momentum and kind of proves their point as they go on. We'll get to that. So because my last episode of the regular Guns and Money kind of political content ran an hour, here's my show notes tonight. I've got a total of 6 bullets we're going to talk about. So let's get right to it. The first thing I want to discuss is what's Wall Street bets for anyone that doesn't, kind of play the game along at home or doesn't work that close to financial markets. What's going on? So here's the story. I think a little over a year ago, there was a Reddit thread or a subreddit, r/Wall Street Bets was started. And it really was just kind of a funny joke and a meme center, if you will, for a while. What it was a community of basically broke young millennials that were taking, what money they had in their 401ks or their Roth IRAs or any self-directed IRAs they had, or taking their stimulus checks and just putting on what they call like these Yolo trades, or yeeting their 401k or their Roth IRA. And some of the language was just funny to me. But what these trades was they were making these really large binary bets where they either win big or they lose big. And they were doing that. They're doing that with options, and options are a derivative security that are available, to anyone that has an account that's approved for options trading. And you've got $1,000 or so, you can buy yourself some calls and puts. And these securities inherently have leverage in them, so they allow you to control 100 shares of stock with just a little bit of potentially with a little bit of premium paid, and they're not the equity themselves. So it's a derivative security. It's priced based off of some underlying asset, and that can be individual stocks, it can be an index, it can be commodities, currencies, you name it. If there's a financial security out there, it probably has some kind of options derivative market associated with it as well. It facilitates the construction of, I guess, more interesting trades and kind of making it more of a portfolio instrument. And you obviously see here, I've got a piece from Radigan Carter called The Wall Street Insurgency that was published today. That really, I think this guy nails it. And this will go along with some other work that I'm going to highlight tonight done by Chris Cole, who is a volatility fund manager. But if I'm losing you with all of this, I guess, jargon, Wall Street nonsense jargon, stick around, because what these folks are talking about is social. It's being expressed through markets. But yeah, so anyway, back to Wall Street Bets. This forum gets launched, and they're making these really big accounts with measly funds that they have. And it was just kind of a way to follow along to see how they did. And, one guy ran his account up to like $700,000 from, I think, starting with around $5,000 in just a number of days or weeks, with just, again, some really binary trades on options around earnings releases for some volatile stocks. That ended up, it ended up kind of falling apart. And actually, now that I think about it, Wall Street Bets may have been around for a longer time, because I think there was an exploit found a couple of years ago in Robinhood's trading app where you could basically get way more leverage. You could get way more buying power based off just a couple of grand than what you should have been able to do based on some kind of like a software glitch. And so folks were able to get several $100,000, or I think in one case, like over $1 million of buying power, put on a trade that have it go against them, or they're wrong, and they now owe more than their equity capital they had started the account with. So Robinhood just kind of has to eat that trade. So there's been all kinds of speculative activity in this Wall Street Bets forum until a few months ago. It seemingly kind of figured something out. So what did they figure out? They figured out that there are a bunch of companies, these cigar butt companies, that, again, they're kind of in their dying stages. And because of that, it's well known that their business results are going to suffer until eventually they maybe get forced into bankruptcy. There's a lot of short interest in these stocks, meaning professional money managers whose job it is to allocate capital have decided to bet against the business results of these companies and ultimately bet that invest in this company's failure. And let's just kind of stick with GameStop, because that's been the name that's generated the most attention. So in GameStop's example, look, you've got a mall retailer in a world where you increasingly, video game consumers increasingly buy their titles digitally and just download them directly to their console or their PC. They basically sell novelties more than they sell. I think they still have a decent console business, but I mean, again, Amazon can also deliver a console, so the runway on that business is clearly short. So the business prospects were very poor, and the short interest was very high. Now, going into this squeeze, I don't know whether or not it was known. I don't know what the original short interest was in the stock. Like, of the available shares, the float, the available shares to trade, what percentage of those outstanding shares are held short? I think it was above 50%, and that's a lot. So what happened? Well, Wall Street Bets figured this out, that, hey, they've got enough folks in their community. At this point, I think it's like 1 or 2 million people in this forum. And if they've each got a couple $1,000, you're into the billions of dollars really quick. And if they've each got 10,000, I think the math was like, you do the math. 2 million members times $10,000 average account. Yeah, it's a lot of money. Is that 20 billion? That's a lot of buying power to focus on a name that doesn't have a lot of float. And there's a lot of shorts in that stock. And so they ran a short squeeze in the stock. But they also did something else. And I don't know if the forum started it or if smarter money out there figured this out, but they have created a feedback loop with options that continually drags the stock higher. Well, explosively, really. And what that is these options that I mentioned at the top of the show. That market is facilitated by a market maker. In this case, I think Citadel does like 20% of all options volume in the United States. So Citadel is this big, giant electronic trading company, and they've got all these really smart algorithms that just route buyers with sellers in these listed options, and they look to collect the spread between the bid and the ask. Well, in order to do that, if you're Citadel, if you're making a market, you don't want to take a directional position with your market making book. And what I mean by that is, if someone suddenly wants to buy a bunch of calls, you've got to make a market. You've got to sell them those calls, right? Let's say there's nothing on offer. Well, you make that market, you go short those calls, you sell those calls, you now have a directional bias in your market making portfolio. You basically are betting that the stock is going to fall, because you have now sold calls. And I'm not going to get into all of the details. If you want more details on this, I can do another show, but hit me in the comments or drop some notes to me, and I'll do that later. But effectively, it puts them in a position where now, to get rid of that directional bias in their market making book, because they don't want to be wrong on direction. They don't want to make a directional call at all. They have to go and buy the stock. And this is something called delta hedging. And delta is the rate of change of the value of the option for every, say, $1 change in the underlying. So if you've got a call with a delta of 0.50, that means for every dollar move of GameStop, let's say, this option will increase in value by 50 cents. And you say, well, that's not that much. But let's say the option costs $2. That's a 25% return on the premium you paid to for a $1 move in the underlying, which is much smaller than a 25% move. So that tells you why folks like these securities, because it gives them, if you're right on direction just a little bit, it can mean a nice return on the option. So this dynamic creates a positive feedback loop for the price of GameStop's stock. That is a tongue twister. And for any name that has low float, a high short interest, like BlackBerry, like AMC Theaters, who did a capital raise based on today's stock price appreciation. So what has happened, the story has kind of evolved a little bit in that they were able to successfully create what's known as a gamma squeeze from all this delta hedging activity in the options market to get the stock to explode from 20 back a couple of months ago to, I think, around 340 today was the top. Maybe I'll put a chart up in post, but they were able to get the stock to rip pretty good. And they did the same thing with AMC, and AMC pulled off an equity raise, which that company is basically on the doorstep of Chapter 11, if my memory serves me correctly. And all of the hedge funds that had the shorts on these companies are getting blown up. And at least one, Melvin Capital, got an injection of loans and cash from Citadel and Point72, which I think is the renamed SAC. Between the loans and the cash infusion, I think it was somewhere around $5 billion after GameStop went from like 60 to 100. But then it's more than tripled since there. So what you're seeing is these hedge funds get carried out on a stretcher because they're shorts. They can't even cover it fast enough. They can't find the stock to buy to cover their shorts. That is a terrible dynamic. And one of the things that you first learn when you start to dabble in the idea of short selling is your risk of loss is infinite, and your risk of gain is capped at 100%, right? Because the stock can go to zero, but there's no theoretical top on any stock. There's no upper limit in terms of what can happen. It's not probable that a stock goes to infinity, and I am by no means saying that will happen in any of these stocks. I don't think the run is done. Don't trade on this. None of this is ever advice anyway, but if you're buying lottery tickets in this, just make sure you're doing it with money you don't have any problem watching go away in a moment. So keep that in the back of your mind. I know a lot of folks want to kind of jump in on this exploit, but that leads us to what it is. This is an exploit. It's nothing about this is illegal. Nothing about this is really any different than what hedge funds do anyway. For any of you that might recall, Herbalife, I don't know how the hell you pronounce it. It was a stock that Bill Ackman, well-known hedge fund manager, said was a zero. And Carl Icahn, another well-known hedge fund manager now, I guess, more like he used to be a green mailer. So kind of more of a Gordon Gekko character is how this guy got his start. But those two had a very public battle where Icahn was able to run the stock up in his face and get Ackman, I believe, to ultimately unwind his short bet on Herbalife. And, you know, Ackman also went and used, I think, the World Trade Federation or some kind of trade governing body he lobbied to get Herbalife investigated while he has a position to bet against the company's downfall. I mean, you know, they're all kind of pumping their own book, right? It's kind of like a big swinging dick contest. And that, you know what, that's Wall Street. Read Barbarians at the Gate or any kind of history on how these characters come to rise and how they swing their weight around and just want to be kind of king of the mountain. It's a very interesting psychological profile to look at these big Wall Street successes, especially the ones the media likes to tout. But this behavior is nothing new at an institutional level. What is new is that the institutions are now the target of this behavior from retail traders with nothing to lose that really aren't even, I don't think, going into the trade expecting to get rich, but are going into the trade as like a giant middle finger to Wall Street, to this system that clearly operates by a system or operates by a set of principles that generally boil down to rules for thee, but not for me. And I can personally attest to that. I see it on the street everywhere. And if for any of you that have known me, that's a lot of my skepticism in other aspects of life or other aspects of power and politics really comes from an eye-opening experience on Wall Street. So that is what is making the response to the goings on in these tiny companies or formerly tiny companies on the brink of bankruptcy. That the response by like the CEO of the NASDAQ, which is a major exchange for U.S. equities and I think even international, she has proposed halting trading in these stocks for a month. The SEC is looking into it. The Biden administration commented on it through their press secretary. Clearly, the centers of power have been shaken a little bit by the wrong enemy, by the plebs, by those who should not be capable of playing in that arena, and not only playing in that arena, but making it hurt, like getting a win in the David versus Goliath. Like, you're not supposed to be able to hit the Goliath square between the eyes. And that's what happened with Melvin. And indirectly, Citadel and Point 72. So that brings us to a really interesting, I think, realization that this, again, is not just about whether or not someone can yeet a $10,000 account into a $1 million account and be suddenly rich. I mean, that is definitely a part of it. There's fear of missing out. There's psychological factors in here. A bunch of millennials watching baby boomers get rich in the market with any exposure to anything indiscriminately, and get rich with just home price values going gangbusters because of really, really short-sighted monetary policy. This is an expression of the frustration of having been put in that box. And I think that's how we need to look at this, because I don't think it's going to stop. Radigan Carter is a gentleman who I think he was a Green Beret. I went through his about on his website. I didn't mention explicitly, but he's done multiple deployments and he's worked with U.S. government agencies. Some kind of gunfighter, at least at some point. He wrote an interesting piece that was published today called "The Wall Street Insurgency," and it's based on a meme from the movie The Joker with Joaquin Phoenix. And, it's funny for about 10 seconds. And then the weight and the darkness of, I think, where some of these trades are coming from suddenly starts to hit you. And then you see that the folks engaging in this activity, following this Reddit page, this is desperation, and this is combat. This isn't these guys just trying to play some stocks to get rich because they want to get in on the Wall Street game. Like, they want to blow up the game and maybe pull some chips off the table as they walk out the room. And that is a much different dynamic. You can negotiate. You can bring a potentially disruptive player into the fold and kind of, give them, imagine like the bushy-tailed senator suddenly showing up to D.C. Never been there before. Suddenly he could get, wooed by the powers that be to play the game. You can't do that with someone who's doing this to be combative. And I think this gentleman, Radigan Carter, just totally nails this. And I'll link to the piece, but he says, boomers don't understand the game that they are now playing. If you haven't seen this meme, you need to watch it. Yep. If your reaction is to laugh, think it's funny, there are dudes being degenerate gamblers with their $1,200 stimulus check that they need for rent, or think that is awful that they would be so careless with money they need to live, or worse yet, don't even understand what is going on, and you are right of bang and don't even realize it. This is what the start of an insurgency looks like. Ask anyone who has been overseas and seen what a society looks like as it starts to fracture. The pain in this meme is real, and it cuts deep for an entire generation. Yeah, and we talked about that. It's kind of like that "okay boomer" meme. Totally is an outgrowth of this feeling like, millennials, irrespective of the ideas about their work ethic, they don't feel like they ever got a fair shake at the same deal that a lot of their parents and grandparents had. And I'm not going to read the whole piece here, but basically I do recommend that you give it a good read, because the reaction from the centers of power, the folks that control things on Wall Street and in DC, has been one of, hey, we're just gonna cut these guys off. We're just gonna make it not possible for them to. We're gonna halt GameStop for a month. Okay. Newsflash. This isn't about GameStop. And I think that they can instigate this dynamic in other securities and even maybe outside the realm of stocks. So what happened after the close today was the Wall Street Bets subreddit did go private. It's not known whether or not like Reddit did that unilaterally or if the community did that themselves, because folks started to infiltrate less than good faith actors started to infiltrate the forum. People that weren't there to yeet their accounts, but were there to, get information about who these folks were and what they were up to. But notably, Discord also nuked their server. So their internal Discord is gone. Dave Portnoy of Barstool Sports has already kind of gifted his platform to the Wall Street Bets crowd for tomorrow, because there are, and Chamath, I don't even know his last name, call him Chamath P. He's a well-known venture capitalist who's a Silicon Valley player. I think he was an early investor in Facebook. He was on CNBC today kind of pulling for this crowd because they tap, and Elon Musk as well. In fact, it could be argued that one of his tweets about GameStop helped really blow this thing up. These are pretty influential people pulling for this group publicly and now donating part of their platform, sharing part of their platform as they're getting censored. What comes next out of this is I think this gets attempted in other areas of the market. They've already There's been posts saying they want to go after silver, which is interesting because the paper silver market is heavily, heavily manipulated by banks. And gold is too, but gold might be a tougher bet. I think it's a lot bigger. The paper market, that is, like futures and financial products that are priced off of the underlying asset. But the dynamic here is very, very explosive because they do not have much to lose. They have so little to lose that it doesn't matter if their $1,400 stimulus or their $5,000 IRA goes away. It doesn't matter. They don't have anything anyway. Like, is the $5,000 going to be a drop in the bucket in 40 years when they have to retire? No. You know, what is the value of the dollar going to be in 40 years? That's anyone's guess, but I can tell you it's going to be different and probably not in a good way. This is part of what happens when you try to centrally plan prosperity. And I am building a case with this content over time. Where I'm going with it is to show you how that's been done in the United States through central banking, through the combination of powerful folks in Washington working with powerful folks in business and industry, especially finance, especially Wall Street, and how they have basically, I mean, they created a game that you could take part in for a while, but now it's gotten so far off the rails as to be absurd. They're not selling any more tickets for entry, so to speak. And they want you to buy securities that don't make any sense. They do want you to invest, but on their terms. Don't go YOLO trading in a strategy that, has taken GameStop from like a $1 billion small cap to I think like a $30 billion large cap in a matter of a few weeks. Which, again, I'm not condoning the speculative activity, but I'm saying calling this out because it's wrong think in terms of investing is totally missing the forest. You're missing what this is. This is an expression of defiance. This is increasingly an organized expression of defiance at a center of power in a way that works. This is like the army that's not supposed to lose. This is the British Army, right? There's more of them. They're more heavily armed. They're better clothed. The rebels in the trees are not supposed to be able to land a blow like this, and they are. And I think that's emboldening the effort. And now that you've got big players like the folks from Barstool and Chamath and elsewhere, and even smart people that I follow in the Wall Street world that understand that when you try to suppress volatility under a central planning framework, you can't do that forever. And you can take the volatility out of financial markets by constantly lowering interest rates and by always bailing out the most important companies when things go belly up. But eventually that risk is going to show up somewhere else. And what they have done, and they being the folks that are inclined to centrally plan and help the agencies and institutions that are all in on that dynamic centrally plan, they have moved the risk away from markets and into our physical lives, into society, to a point where folks have nothing to lose. And the way lots of people, and we're talking about millions of people, the way millions of people that have nothing to lose express that is terrible for the cohesion in society. And, I've talked about, I am hopeful for things, but, we haven't seen the bottom, I think, of that lack of cohesion. And this really jumps out off of the tape at me, just like, whoa, this is a movement that is getting traction because they're victorious in a sense. And now the efforts to censor them and kind of wag wag their fingers at him just like a boomer would, right? Just like dad would have, well, that's an imprudent move, Sonny. What you need to do is buy, 10-year treasuries and hold them for 30 years. It's like, well, yeah, when rates go from 10% to zero, that works out pretty well on a total return basis. But, these things that worked for mom and dad are not going to work for Jimmy or a lot of the, or Sally, or a lot of the millennials out there really busting their butt just to pay rent or to maybe have a chance to put 50 grand down for, a 1,500 square foot house. Like just, who's going to buy these houses when the median price is $375,000? Millennials don't have the cash flow. They can't make the credit work. And while these powers that be, wag their fingers at them, that is just a strategic blunder. And Sun Tzu, he says every war is won, or every battle is won before the first shot is fired, before it's even fought. And what you're seeing is those that have maintained that 1%, the 1%ers of the world clearly have become complacent in their position and were totally unprepared for what kind of dynamic they were going to have to face. They thought it was going to be dudes and guns, and no, it's the internet. It's computers, it's tech, it's ones and zeros. And it's just taking advantage of exploits that already exist in the system in a way that they never considered. They didn't turn the map around. And this is why individual liberty is of paramount importance to me in a political sense. And that doesn't mean not that I want to go live in the woods and never interact with someone. I mean, I don't want anyone to be bound by my decisions without their agreement, without their voluntary willingness to. If folks want to say, hey, I have an offer, I'll pay you to do this, or we should get together and form this group, and all the members say, yeah, okay, let's do that. All right, sweet, that's awesome. But the moment that I have the ability to, or anyone has the ability to remove your agency from you without your consent, we've kind of entered a world where we're going to start doing things that create volatility in society. And we are clearly at the point in history where that's being expressed. And that changes, that changes things. So, what do we do about, there's really, I guess, not much to do about this except kind of watch and see how it unfolds. Like I said, I do think there are other markets that are on the list of, I guess, targets, if you will, for this group. I don't think this chunk of capital, this pirate ship of capital, is going away. These guys are getting away with running amok, so to speak, in the high seas of of meme stocks, and they're getting traction among some pretty important missionaries like Portnoy and Elon Musk and others. And man, that's powerful. So we'll have to see what the response is from policymakers, what they ultimately do decide. Like I said, they're going to be chasing their tail on this. Okay, if you halt GameStop for 30 days, big deal. They'll just take it to another trade. They'll take it to silver. They'll take it to other stocks. There's some pretty good arguments that gamma squeeze dynamics were at play in pulling Tesla higher throughout 2020, because I think it had like an 800% return, which I mentioned in last month's letter. And I'm going to cover some other things in more detail for the January letter, which is due to come out here in a few days. So if you'd like a peek of that, get in touch. But I hope you got something out of this. I hope you better understand what's happening in the market, and I hope you better understand why. Because what's happening in the market is only really that interesting if you're someone like me who kind of follows that space. But the why is interesting, or should be, to all of us, because the why is what we need to figure out how we fix. And the why is behind, the impetus for these kind of seemingly reckless decisions of this group is they feel like they've been totally cut out of the loop in making this work for them. And if we don't get our hands around that problem, it continues. the economic backdrop is still pretty rough. It was maybe coincidence that today was also a Fed day. Jerome Powell and the Federal Reserve came to a decision on interest rates, which was to hold them at zero on the short end of the curve. And Powell ducked the question, says this isn't our business. That's utter nonsense. They've been pushing people out on the risk curve to generate a decent return for years. And that's something in the world that I live in. People are desperate for any kind of safe product that'll give them just 2% a year. And it doesn't exist, really. I mean, even to get 200 bips, you've pretty much got to take risk of some sort. So the policymakers are going to dodge this. They're going to come up with, I think, responses that will prove to be easy to usurp and beat from a gameplay standpoint. And I don't think this is quite done yet. So I guess there's not much actionable on this, but I do think it's a very interesting dynamic, and the actionable stuff is totally speculative and prone to discontinuous trading activity, meaning you could wake up and the stock could open 100 points down or something like that. So the water you're stepping into is very, very rough. And while it might serve you, it also could wipe you out. So don't yeet your retirement savings. Don't yeet the money you need to pay your bills and feed your families and such on this craziness. But do not discount the social dynamics that and the psychological dynamics that have led to this behavior, and especially don't discount the fact that it's picking up traction. So that's it for this episode of our Markets Chat. I'll be back soon. I hope everyone stays well and stays healthy, and we'll talk to you soon. Take care, guys.